Hey everyone, welcome back to another episode. In today's video, we're going to touch on a few updates in regards to Tesla, including their Q3 delivery numbers. They reported those numbers on Friday, so we're going to run through those as well as a few other minor updates. But as you can see, Tesla had a great day today, up 2.55% in comparison to the NASDAQ, which was up 2.32%. So a pretty great day for the market overall. We'll have to see if it continues as the week goes on. But let's dive right into these updates. Last Friday, Tesla announced that they had delivered 139,300 vehicles for Q3 2020, which was an all-time record for quarterly deliveries for the company. Of those vehicles, 124,100 of them were the Model 3 and Model Y, while 15,200 were of the Model X and Model S variety. Total vehicles built for the quarter totaled 145,036, with Tesla stating, quote, "New vehicle inventory declined further in Q3 as we continue to improve our delivery efficiency," end quote. It is honestly pretty amazing that Tesla is continuing to expand so rapidly during such unprecedented economic times. We have a worldwide recession going on as a result of COVID, where every other automaker out there is reporting a decline in sales year over year, yet Tesla continues to expand every aspect of their business. Legacy automakers like GM reported their Q3 numbers, and their vehicle deliveries were down roughly 10% year over year. These automakers already have to come up with a plan to begin to sell electric vehicles, and the fact that the bread and butter of their business, ICE vehicle sales, are declining rapidly really puts the pressure on these companies to produce an attractive and affordable electric vehicle quick. Each passing day that goes by puts these legacy automakers in an even tougher situation, and I believe it is only a matter of time before the majority of them go bankrupt. Building an electric vehicle is a totally different ballgame than building ICE vehicles, and you're naive if you believe these automakers can just flip a switch and produce an electric vehicle that can offer the same bang for the buck than a Tesla can. By the way, if you guys are looking for a chance to get a free stock with Robinhood worth up to $500, all you have to do is click the link in the description and sign up. You don't have to deposit a single penny. All you have to do is click the link, sign up, link your bank account, and you're done. It's that easy. In other news, Tesla got a price target raise today from JP Morgan analyst Ryan Brinkman. He boosted his one-year price target to a whopping $75 from $65, citing strong Q3 deliveries as his motive for the increase. This would imply that Tesla's market cap shrinks from roughly $400 billion today to around $80 billion within a 365-day time span. I don't know about you guys, but personally, I feel I could have been blindfolded and pulled a number out of a hat that was more realistic than Ryan Brinkman's price target. In my personal opinion, these price targets are totally unrealistic and are honestly misleading many investors that take analyst opinions into consideration. For the majority of analysts that follow Tesla, they have a track record of throwing out unrealistically low price targets and then revising them to try and play catch up to the stock price. These analysts not only do not understand Tesla as a company because they're used to analyzing traditional automakers, but they also do not know how to value a growth company. Traditional metrics go out the door when it comes to valuing a growth company compared with an established company that has single-digit growth each year. I get it. Analysts believe Tesla is currently overvalued. I can relate, but that does not mean that Tesla's valuation will not make sense if you have a long-term time horizon. In the next 3, 5, 7, or even 10 years, when Tesla's doing $1 trillion plus in revenue, they're going to be investors kicking themselves for listening to these biased and false analyst recommendations. In my opinion, these analysts need to be replaced with tech analysts that are familiar with exponential growth and software as service type revenue. Comparing a company like GM to a company like Tesla is comparing apples to oranges, and that is why I feel like these analysts are not qualified to make buy or sell recommendations on Tesla stock. Let me know in the comments if you guys agree with me on this point. And lastly, we had some news break that Tesla has been discussing a possible investment in Indonesia. It would seem that Tesla is aiming to secure nickel from Indonesia as supply of nickel is very abundant in that part of the world. On the last earnings call, Elon Musk pleaded to miners to mine more nickel as it would be used more heavily in their battery production moving forward. It makes sense for Tesla to be reaching out to Indonesia as they are increasing their nickel output this year by 46% year over year to 550,000 tons of nickel. It should be noted, though, that Indonesia has placed bans on exporting nickel ore in order to encourage internal production, so if Tesla is able to reach an agreement with them, they would need to invest in processing it locally. Indonesia also partnered with LG Chem and CATL last month and granted approval for those two companies to build a battery factory in Indonesia. It is no secret that these companies also supply Tesla with batteries, so it would make sense for Tesla to obtain their nickel from that region. I believe that Indonesia has the fourth highest population in the entire world, so it would not surprise me at all if Indonesia ends up being one of Tesla's next gigafactory locations. What do you guys think? What do you believe will be the next 3 gigafactory locations for Tesla? Leave me a comment down below. That's going to wrap it up for today, guys. If you have any ideas for future videos that you want me to do, leave me a comment down below. If you enjoyed the video, make sure you smash that like button as it really does help my videos reach other viewers. And until next time, take care.